Welcome back. You're watching Closing Trades on ET now. Let's also welcome on the show Rajesh Palvi of Axis Securities. Hi Rajesh, afternoon. Let me start off by asking you about the banking index. In the month of August, we've seen the Nifty Bank give out a good 4 to 5%. So when there's contribution from a heavyweight like the Nifty Bank, it definitely is a very encouraging sign. What's your take? What are the technicals suggesting? Is this something that will take leadership and thus support the index too?
Yeah, good afternoon. So, Bank Nifty was underperforming, but the kind of rally we have seen, especially in last two trading session, and now comfortably Bank Nifty is managing to hold above 36,500. So it's a positive development on the Bank Nifty front. Even on if you look at the open interest and the call put concentration data also, so 36,500 was the major call writing activity was there. But now since Bank Nifty is now trading above 36,500, so most of the call writers have unwind their position, and now call concentration has shifted to 37,000 level. So looking at the current situation, we believe that Bank Nifty can lead further from the current level, and possibly target we can see in the near term towards 36,950 to 37,100. We would suggest a stop loss of around 36,300 to remain long in the Bank Nifty, especially if you look at the private bank, as well as some buying interest has been witnessed from the PSU bank also. So from PSU space, we like SBI at the current juncture, and we feel that SBI after making a low of around 410, it can show some strength from the current level. We have seen short covering action also in the last trading session, and continuity is there in the today's also. So we believe that SBI can move further higher towards 445 to 450 zone in the coming trading session. One can buy SBI also with stop loss of 425.
Okay. Siddharth, let's talk about banks. The expectation is that, this economic recovery will continue. We will see, the capex cycle as well seems to be turning around. The GDP number did indicate that, yes, private capex took a bit of a backseat, but that was on a month-on-month basis. Since then as well, there's been a bit of a pickup. So the question is, it's something that's going to spur credit growth. What bank, which are the banks that would be best placed to capture this? Because within the entire financial space as well, now we have the PSBs, we have the large private banks, we have the smaller banks, the SFBs. So how would you play banking?
We are not overweight, we are market weight on the banking space. Having said that, there are 2-3 flip points which are strong enough for the banking space. If I talk about the NPA has peaked out broadly. Of course, credit growth is quite low if I talk about 30-year low, but interest rates are benign. Of course, private capex is not coming up, but the strong point here is utilization levels in the manufacturing space is coming up well. So this gives a bright hope of capex coming up very soon. Having said that, banking, as I said, we are more of market weight rather than overweight because of course, its nature of underperformance since a long time. But still, we are betting on the private banking space rather than public banking space. And in the private banking space, we are looking at Axis Bank, ICICI Bank for that matter. And in particular, if I pick and choose a stock, I would be going with ICICI Bank with a target of 800.
Okay, let's move on and let's also discuss some of the other names too. And Asian Paints, given that this is the one which is flying high in today's trading session and showing leadership amongst the large caps, it's a solid 3.5% move that you're seeing on Asian Paints right now. It's already standing above the 3,300 rupee per share price point. Naresh, while for any FMCG company, and perhaps Mubina can throw more light on this, it's really not about growth because barring an ITC, growth is never questionable for any of these consumption plays, and in particular the likes of Asian Paints. It's always about the valuations that these stocks are quoting at, which are extremely high and rich. From 3,300, where do you see Asian Paints headed in the medium term?
So, in terms of Asian Paints, I've always focused on looking at the chart and forgetting valuations, because valuations have been over the board for the last many years. So the day when the trend changes, that is the time where we say, okay, it is done with. and that has not been happening. So we've not seen much of a say recent bottoms being broken. In the short term, what we've seen is it was in a range of between 3,029.50 to 3,150, 3,200. So breakout about 3,200 gives us a minimum target price of 3,400, 3,500. So I would expect this to go towards 3,500 and pause. And the stock has a tendency to do that, makes a breakout move, goes up 10-15%, and then goes into a 3-4 month pause. So in this move, we would expect say closer to 3,400, 3,500, where one should be looking out to book out the trade. And beyond 3,500 looks difficult in this momentum. The volumes are good, but not that great to signify a major move. So the view is there is momentum. We've given a breakout, but closer to 3,500, one should be looking out to book out of Asian Paints and again wait for that 3-4 months of consolidation.
Right, okay. That's the take coming in on Asian Paints right now. Rajesh, where do you stand when it comes to Asian Paints and in fact the entire paint sector and where it's headed next?
Yeah, so setup for Asian Paint is very strong, and the kind of activity which we have seen in the month of August and the rollover action as well as the kind of accumulation we have witnessed, it shows clearly it's heading towards 3,600, 3,700 in the short to medium term basis. So it's one can use any dip volatility as a buying opportunity in the stock. We feel that till stock is trading above 3,180 level, it's a buying opportunity in any minor corrective action. So we feel that 3,600 to 3,700 could be the next target for Asian Paint in the short to medium term. Even if we look at the Berger Paint, also stock is consolidating since last a couple of weeks, but still stock is forming a base at around 780, 775 zone, and the base formation is suggesting that once stock manages to cross above 840 level, then possible upside really we can witness towards 940, 950 zone in the Berger Paint also. So both the stocks are looking positive, and we feel that buy on dip should be the strategy to buy these stocks in any minor corrective actions.
Okay, that's the take coming in on Asian Paints. Meantime, the F&O inclusion list, the 12 new or rather 8 new entrants which are going to make it to the F&O list come October 1st, they are the ones which are also spiking up in trade quite a fair bit. And of course, the entire list of the names which have made their way since yesterday, they as well are looking rather lively in trade. Let's just dig out some of these names for you and show you how they're currently panning out in trade. And IEX clearly being one such case in point. I mean, traditionally, we've seen that with the likes of Deepak Nitrite, for instance. I mean, not to say that this is not one of the favored ones in the market, given that this is from the specialty chemical space, which the market has seen a frenzy for. But that said, typically when you do have an announcement of some stocks making their way into the F&O segment, they are bound to see some lively action, and that was pretty much the case with the list of names which made their way since yesterday, 10 of them, or for that matter 8 of them, which got announced to make their way into the F&O segment come October 1st. Dinesh, just a quick chart check on what you're reading for IEX and this big spurt of a double digit, a big breakout in that sense that you're seeing on the stock today.
So this has been a surprise in terms of momentum. So the stock did not have, so the stock has been in a strong uptrend ever from 200, 250 levels, even very recently when it broke out of 410. That was the time we were expecting a sharper move, but it went to 440 and again went into a sideways drift back to 400. The current move is really sharp on the back of the F&O entry. So for now, I think after today's move, we could get into a pause because it is overdone in the short term. The volumes have been way too higher. It's been, say, a momentum speculative move out here. So at current prices, it is a good time to book at 550 plus levels. We could expect some bit of a pause going forward.
Sure. Let's just dig out the list of the names which are going to be making their way into the F&O segment come October 1st, and the likes of an Abbott India, you've got a Crompton Greaves Consumer Electricals as well, you've got a Dalmia Bharat, Delta Corp, India Cement, JK Cement, Oberoi Realty as well as Persistent Systems. Rajesh, if I could just get your sense on where the rest of the IT pack has been, large and mid caps alike, and especially the likes of a Mindtree, InfoEdge, which is not quite a pure play IT company in that sense, and then Persistent Systems, which has been a laggard in that sense to make its entry into the F&O space, and now with its inclusion getting announced, where do you see Persistent headed next?
So broadly, if we analyze Persistent, it's in bullish territory, and across all time frame stock is in bullish territory. But since last few trading sessions, some bit of consolidation is happening in the stock. But looking at the setup, we believe that this stock will continue its upward momentum. And looking at the chart structure, if stock continues to hold above 3200 level, then possible upside target we can see in the near term towards 3550, even 3600 level. So overall setup for Persistent is positive. So one should buy this stock with stop loss of 3200. Upside target we can see towards 3550, 3600. So overall setup for stock is positive.
Right. Siddharth, what are you making of first this entire move on IT that one has seen, and now people are saying that perhaps IT is going to take a bit of a backseat given that growth seems to be well in the price right now, and the fact that you've seen a very steep up move on the entire IT pack. And then juxtaposed to names within IT like a Persistent Systems perhaps, which within IT have not really been the market darlings.
To you that IT has run up quite good over the period of time. Whether it is still a opportunity in IT, my answer is one has to be very selective on the IT front. Although we are positive, because looking at the tailwinds in the industry, we are quite positive on the technology space. But if I want to select some of the stocks from the same space, on the front line, I would of course stay put with TCS. And in the mid-cap arena, I would like to stay with Mphasis kind of a play, which is more of an application BPO in services catering to logistics, and infra Q1 was quite good, deal wins was 2x. So something of this sort where a bit margins could be around 16% for next 1 odd years. So we are quite constructive over companies like Mphasis, Zensar Technologies, which is again relatively cheaper in terms of valuations.
Okay, let's just pause for a bit and let's address an exclusive bit of info that we're getting in what can be a big development for IDBI Bank privatization. Sources tell us that the government is set to knock on the doors of the central bank to try and seek clarity if the RBI will allow for industrial houses to participate in the stake sale process for IDBI Bank. Ruchi Bhatia, my colleague, joins in with more details on the same. Ruchi, what are you picking up?
Well, ahead of IDBI Bank's privatization process, we do understand that the government is seeking clarity from the regulator, the RBI, on whether they will allow industrial houses to own banks. Remember, it was in the month of November that an internal working group of the RBI had suggested allowing large corporates and industrial houses to own banks, and the working group had suggested that there is a need for making changes by amending the Banking Regulation Act of 1949. If these recommendations are to be accepted, this is going to mark a re-entry of India Inc. into commercial banking space after a large span of almost 40 years. We do understand that the government is seeking policy clarity from the central bank, and this is going to be very important ahead of the impending IDBI Bank privatization process. The government feels that if we were to keep the industrial houses out of the process, given the fact that very soon the government is going to hire transaction advisors, the legal advisors, and will issue a notice so that expression of interest can come in for IDBI Bank stake sale process, this could possibly hurt the potential investor interest that we will see for IDBI Bank. In fact, we do understand that DIPAM has sought clarity on the matter from the Department of Financial Services, and they have asked DFS to coordinate with the central bank on this issue. The government had also sought clarity on a whole host of other issues as well. Remember, ET Now in the past had reported how the government is seeking clarity from the central bank on the glide path for the new potential investors of IDBI Bank as well. The government feels perhaps it is time for us to take a more calibrated but a more inclusive approach towards banking licenses for industrial houses. So this is going to be a big development if the central bank were to give a go-ahead to the government to allow industrial houses. As I said, this will mark a re-entry of India into commercial banking space after a long span of 40 years. Having said that, we are yet to hear from the central bank on this issue. We are yet to hear, the final view that the inter-ministerial group will also take on this matter. This is a very important development. The government is looking at IDBI Bank's privatization process in this year itself, and this is an important matter that the government is seeking clarity over from the central bank.
Indeed, this is an important development that Ruchi just reported on, the fact that the government is now seeking clarity from the central bank, that's the Reserve Bank of India, on IDBI stake's sale, and whether or not it's going to allow industrial houses to pick IDBI bank stake or not. Let's just check in on what the stock as well is up to. In the meantime, just wanted to get your sense in Siddharth on what you're making of this entire privatization process, because start of the year up until budget or even post that, you had the PSU pack really come back into the limelight because there was renewed optimism on the disinvestment as well as privatization process. That's taken somewhat of a backseat now, but what is it that you're making of whether these stocks continue to be investment worthy, or are you going to still wait it out for the first privatization or disinvestment to go through and then perhaps take a call?
Well, we have to scout out for value here, and wherever we find a good value, for example, BPCL is one of the value propositions where privatization has been called for. Added to that, of course, privatization, the way it was spoken about in the union budget, it is not going as per the pace which it was anticipated. But again, a more reformic guidelines or pipeline has again come up in front of us. That's NMP, National Monetization Pipeline, which is of around 6 lakh crores from different divisions, railways and infra, so and so forth, and many other areas. I think that is also a welcome move by the government. Of course, any and every stock which market is anticipating may not give you a great performance, but I think you have to go out for some good value in this. One of the values which I look at is something like BPCL, something of Concor, which government is talking about. So these all stocks has really worthy for investments with a medium to long term perspective.
Okay, so that's great to have you on the show. We'll let you go on that note. Thanks as always for joining in. I'm going to take a very quick break. We haven't done that in a while with news that the Nifty is lying flat still. We're still holding on to 17,100, and it's the broader markets which are performing once again.
Welcome back. You're watching Closing Trades on ET Now. Let's welcome on the show Yogesh Mehta of Yield Maximizers. Hi Yogesh, good afternoon. You know, we've been talking about how sectoral rotation has taken place in the market. So perhaps the ones that have been underperforming will now start taking the lead, as the markets move forward. How do you believe that is something that could happen, that maybe IT, metals and those usual momentum trades could perhaps take a back seat, and it's the rest of the guys, the banking names, etc., that will now take the lead in the bull market going forward?
Hi, good afternoon. Thanks for having me. Overall, what I feel is that sectoral rotation, of course, is visible since the consolidation of last 2 months, and especially in August series, where metal was the best performing, and then now in August series, IT was the best performing sector. And now here, post-consolidation, the valuation plays a catch-up role, and post-liquidity is the second one, which is driving this bull run into all the sectors. Now, it seems that one or other positive outcome or any announcement or news flow is showing that this sector is still not performed, and that's why the valuation is not catching up, and hence the buying is attracting. the way we have seen, for example, real estate sector is today is in limelight in this dull market, and only because that the Mumbai property registration has soared up in the third consecutive month, and all the stocks like Oberoi Realty, even Godrej Properties, which are dominant player and debt-free companies, are in the limelight. So overall, I feel that yes, once this sector moves up by 10-15%, then there is a consolidation and some profit booking is seen, and yet there is another sector which moves up. All the sectors are not participating, and the same which is visible since 15,500 levels. But yes, the indices, the engine is moving, and rest is following them, and we are at 17,000 levels.
Do you see more pain, Yogesh, for the auto space? Because, we have seen now, the demand picture, of course, is different. But now, along with Maruti, Tata Motors, M&M, all of them are saying that, look, we're going to have to cut production. Maruti, in fact, has already cut production by 60%. They've said they're going to cut production by 60%. So even if there is demand, do you think the problem will be that these car companies are not able to cater all of this demand?
Mubina, for that auto sector particularly, they are facing that issue of chip and the semiconductor issue is there, and the shortage supply is showing some kind of a disruption and disturbances into their plants. Hence, Maruti has announced, even Tata Motors has shown, the management has clearly shown the concern over availability of the semiconductor, and hence the production may remain sluggish. Overall demand, I don't foresee there is my view is rather on the other side, that demand may pick up. Only the thing is manufacturing constraint will remain there. But as and when the economy gets unlocked, festive season is on the cards. Even in my last interaction, I have mentioned that we may see some pump up activity into auto sector, two-wheeler, four-wheeler, apart from tractor, which is the best season till April, May, June, July. But the rest, PV, CV, MHCV, all this production, all these companies will have a better days on festive demand. And the pandemic has definitely boosted this demand for especially two-wheelers as well as passenger vehicles both together. And with these new norms of insurance, I think commercial vehicle may remain into the demand may remain further on the higher side. Same with manufacturing sector, which is showing good uptick across the sectors. All the activities are picking up, and the plants are running now almost to 80 to 90% capacity across the businesses. I think that will drive demand for commercial vehicle as well. So overall, I think that the valuation is still not so expensive for auto, four-wheeler and the commercial vehicle manufacturing companies. But yes, demand will remain on a it will be in demand, and I think the sales number will pick up further. We have seen some disappointment in Mahindra and Mahindra and Maruti due to, they have already mentioned that there is a shortage in August month also, and that's why it is sluggish. But I think it will be on track from October, November onwards.
That's the take coming in on autos right now. In the meantime, let's just take stock of what else the market has been up to, because you are seeing that the Nifty has completely quietened down, but that's fair given the hard and steep run up that you've seen in the last two trading sessions. Right now, we're standing sub the 17,100 mark for the Nifty futures. Breadth though is pretty much intact. But let's stay with autos, and India's largest UV maker, that's M&M, is rejigging its production to deal with supply constraints because of the semiconductor chip shortage. That is the word that we're picking up. In fact, sources tell us that popular models like XUV 300 and 700 will see a push at the cost of the older ones as per this new strategy. Utkarsh Chaturvedi, my colleague, joins in with more details on the same. Utkarsh, what is M&M's plan to try and realign their production mix?
We all know the fact that any car maker in this country at this point of time, due to what happened in Malaysia, there was a global crisis going on, but the lockdown in Malaysia is being impacted. Now, M&M, Tata Motors, all being impacted, not the amount Maruti is, given the fact that the volume is much low. So what they're doing now is really realigning the production mix. Now, there are three things. One, you are giving more preference to the models which are in demand. you are not producing models which are not at all in demand, and the ones who have been there in the past 2-3 years, average sales models, they are getting a hit. So what goes up? What goes up is XUV300. Almost 6,000 is what the numbers is, and for a vehicle, for a UV at that price, after 2 years, giving that number is really good, and that is almost 15% up from the month of August. Then XUV700 is something which they have just come up with. 1,000 is which they have produced last month. This time it's almost more than double, around 2,300 is what they are looking to produce in the month of September. If you speak about Thar, that's a bit interesting given the fact that the company has good sales, long waiting period. Still, Thar will see almost a 5% cut in production to around 4,000, from 4,200, 4,250. What goes down now is the Bolero. The Bolero and Scorpio both will, the numbers will be down to almost 10 to 15% in both these things. Marazzo will not be produced at all. That vehicle hasn't been produced in the past 2-3 months, and that will continue given the fact that there is no demand. So at this point of time, the strategy is simple: XUV300, XUV700 have the focus. Thar will continue to be the focus, and that's why I said that the cut is interesting, given the fact that the numbers they have are huge and there is a long waiting period. But the ones which are not that exciting at this point of time, like Scorpio and Bolero, will take a cut this month, and this strategy can really continue in the coming months as well.
Okay, Utkarsh, we'll leave it at that. That's Moton and what they're trying to do to try and grapple with the semiconductor chip shortage. Having said that, Tata Motors has had a bit of a flip-flop of late, and today is holding up by a good 2.6%. Having said that, M&M is at the other end. It's down 2.7% as we speak, the stock that my colleague Utkarsh just highlighted and talked about. Maruti is well under pressure. It's down by about 0.6% even as we speak right now. Naresh, quite a bit of diversification in that sense within autos. While M&M, Maruti clearly has been the weakest link. I can't say the same about Tata Motors. What is your own reading within how Motown constituents should be looked at, and whether or not there are any opportunities to go long here after the dips that these stocks have seen?
So the way, if we look at the whole two-wheeler and the four-wheeler space, it seems wherever there is a chance of an EV play has done better. So that is where Tata Motors comes in place. Maruti has been one which is considered to be one which may not get disrupted in the near term, but still overall the trend is still weak. Same way we are seeing two-wheelers where there is some belief that there would be disruption from the EV space has actually taken a big knock. So for example, if you look at a Hero MotoCorp, the stock is down from almost a high of 3,500 to 2,700 over the last 6-8 months, and it's finding it tough to make a comeback. The only thing what we see is in the whole space, we like the two-wheeler space more compared to the four-wheeler space, because that is where there is a good enough risk reward, because the breakdown which happened in all the names did not see any follow-up. So breakdown below 2,700, 2,750 did not see a follow-up in Hero MotoCorp. So Hero MotoCorp looks interesting at these prices. Same is the case with the Bajaj Auto. The stock has been making a base around that 3,550 to 3,700 mark over the last 6 months. That is where the base is. So we can see a good bounce back in a Bajaj Auto as well. So in the auto space, we would go with a Bajaj Auto and a Hero MotoCorp. Avoid Maruti as such. Tata Motors, whenever the stock is back above 320, that is the point of time to get interested. At the same time, auto ancillary stocks have been making very different trades. So if somebody wants to play the trade, auto ancillaries look more exciting than auto itself.
Anything you'd like to identify in the auto space, considering that all of them are going through quite a rough patch, especially a stock like Maruti Suzuki? No, okay. Rajesh, let me get in your take on realty. We've been speaking to our analysts about that, especially an Oberoi Realty, which has now rallied, 12%. Now, we know how strong sales have been for the real estate market in the last couple of months. But do you think, the momentum in sales can continue with this gusto? Because now the talk is that interest rates perhaps will rise from here on. It may take a little time, but they may rise. Do you think that was the key trigger for this surge in realty sales that we'd seen in the last couple of months?
So most of the real estate stock has shown, good, consolidation in last couple of weeks, and the price pattern is suggesting that, now stock like DLF, Oberoi Realty, Prestige State, this all stock has, given a breakout on its, near-term time frame. So looking at the breakout on the stocks, we believe that, this momentum is likely to continue further, because the kind of move we have seen in the realty index itself in the today's session is showing that, we may see, further more upside momentum to remain continue. Stock like Oberoi Realty, Sobha, DLF, these three stocks are looking promising at the current juncture, and we feel another 4 to 5% up move we can see in the near term basis. So our view is positive on all these three stocks, Oberoi, Sobha and DLF.
All right, so that's the word then on Oberoi, Sobha, all these stocks essentially. Yogesh is pretty optimistic about them. Anything on metals, Yogesh? Because like I was talking about in my earlier answer, and also I'll show the same question to you. Within metals, do you see favor shift towards base metals? Because now the news flow reads as such that aluminium prices are at a 10-year high, and alumina prices as well are picking up due to supply disruption. So do you think that the attention may now shift in favor of Hindalco and Nalco over Tara and JSW Steel?
Yes, Bhumika, especially the way the demand in auto segment and the industrial use, consumption for aluminium particularly, where manufacturing like Hindalco, Nalco would be in limelight, definitely yes. But on the overall metal space, I am not so bullish from the current juncture at this phase of the demand and the profitability they are into. The capacity expansion has already been made by major of the companies in steel manufacturing. But as you mentioned, Hindalco, Nalco, I think more or less all these companies have already the demand which is increasing right now, off late in last 2-3 days, maybe remain seasonal or maybe for a temporary time frame. But I believe that upside for all these companies would be very much limited from current prices and the valuation they are putting at. Metal has got cycle of 7-8 years every year, and this year is no more different, and we are seeing this bull run into that probably 1 year earlier. But I think now it's time to investors to shift from their metal exposure to elsewhere, where real estate companies are available at a very debt-free companies are available at a reasonable valuation. So maybe I would suggest that it's time to switch from metal. It hardly has its upside is very much capped.
Right. Okay. Just wanted to get your sense, Yogesh, on what to do with Bharti next. We've seen 2 days of a massive move up on Bharti after the company indicated that they're getting their war chest ready with that sizable rights issue of 21,000 crore rupees for future growth opportunities. What Sunil Bharti Mittal had to say in his address is something that the markets clearly liked. But do you sense that given how long-term a story this is building out to be, Bharti can still be bought, or do you think the large part of the move in the stock is behind us?
Aisha, now Bharti has got some interesting stories. Since last 2-3 quarters, the price was not moving anywhere, and 600 to 530, and it was remaining at 530, though Nifty has shown a good run up from 15,000 to 16,300. But overall, I think the way promoter have announced their right issue, raising 21,000 crores, and they'll be tackling more on the duo. Now the duopoly will be in favor for Bharti as well as Jio. So that is done. That is commanding positive advantage for them. And apart from that, management commentary post the IPO, post the right issue announcement, where promoter have mentioned that they are looking at not diverging this further stake, not more improving, increasing more stake into Indus Tower. That is also a positive commentary from there. And ARPU, which needs to be inched up further significantly, and the price hike is not cannot be ruled out. So these are the positive commentaries where it is a darling stock for all the portfolio FIs as well as the HNI investors domestically, but it was not showing any kind of impact. With this positive commentary, I think again it may remain in limelight with at least 2-3 quarters down the line. Visibility is there. The numbers which you have seen in Q1 numbers, that is the annual number, they are back into black. And if increasing ARPU from 140, 145 level to even 155 or gradually 170 towards end of or maybe 4 quarters down the line, it will show some sign of a ray of hope for these companies to survive further. 5G spectrum and the new circle licenses which are due, this 21,000 crores more or less will take care of that, and the duopoly advantage. So this has turned the table for Bharti really. And I had mentioned earlier also in my 1 quarter, 2 quarter earlier conversation with you guys that Bharti is not showing any kind of fireworks, but it is just a matter of when rather than if.
Fair point. Okay, that's the word coming in, and where the prospects for Bharti are looking forward going from here. But less than 10 minutes to go before we wind up for the day. Let me take it across to Jayesh, find out what the dealing room chatter is like. Jayesh?
There has been some bit of caution that has been exercised by the dealing rooms on two counts. One is because the 100% peak margin rule has come into effect, and that may cause an impact on the NSE volumes. Second is that we were trading at elevated levels in the morning. We saw that the Nifty hit 17,200, and from there off there has been some bit of profit taking that has happened at elevated levels. Similar was the case for the Nifty Bank, which has fallen a tad bit after nearing the 37,000 mark, which was the first time since 25th of Feb this year. So both frontline indices firing on all cylinders, and thereafter taking a tad bit of a break. As far as stock specific action is concerned, watch out for IEX, because that has been gaining on good volumes report that was generated earlier in the day, and the stock is up nearly 10%. On the other side, Voltas and Havells are seeing good amount of open interest built up, and there is some significant long positions that are getting into the system. Lastly, watch out for the real estate pack, especially the Mumbai based ones, and the fact that Oberoi, it was announced that yesterday it will be entering into the F&O segment from the next series.
All right, just the last couple of minutes to go for trade then, and it's interesting to note that it's the broader markets now that are really taking the lead, with the Nifty and the Sensex as we speak now losing 0.4%. I think we're just shutting shop quite low, in fact near the low point of the day. So some closing strategies then. Naresh, in today's trading session, what's standing out, and what do you make about this outperformance, the 7th straight day in fact of gains for the mid and the small cap index?
On the stock specific basis, we are seeing price volume action in two names. One is Tata Power, which has seen a good volume and price action, very close to the previous breakout point of 136, 137. It's around that 133 mark. Looks promising for the short term. Could head up towards 145, 150 in the near term. Second is United Spirits, which has broken above the 730 mark, which was the high last week, and made a dip, retested 680, and has again come back and crossed above that 730 mark. Good volumes in both United Spirits as well as United Breweries. So like United Spirits and Tata Power for the short term.
Yogesh, quickly what I noticed is that it's IT today that's among the top sectoral losers. What are your thoughts on the technology space after the rapid rally that we've witnessed?
Mubina, it's just a coincidence that IT sector is down today, though Nifty is up. As I mentioned last month, they were the top gainer. But I think now on the large cap side, all at 14 lakh crore market cap, 2 to 4% constant currency growth with EBIT margin around 23-26% in the range. I think large cap companies have got very limited upside from current valuation juncture. So I would say it will be a good to book profits on the investors side. Those who are looking at further 3 to 5 years horizon, that is okay. But for short-term opportunity, 1 year or maybe 3-4 quarters down the line, I think there is very limited upside from current juncture. So better to book profits here. Rather, mid-cap companies where Tech Mahindra or HCL Tech, it's a different story because the valuations are still compelling. So it's a mixed kind of approach that large cap may remain under selling pressure, and mid caps may remain subdued here, or maybe on upper side as in when we see Q2 numbers. But given this fact that rupee is at 73 level again, this will have some hampering on this Q2 numbers. A bit margin may impact by 25-30 basis points further. I think they will remain in the limelight. They will remain in pressure.
Naresh, while Bharti has fallen flat after 2 days of a very steep up move, what about Reliance Industries? Because while day before it showed some promise, it managed to claw back to that 2200 price point. But from there, even yesterday or today for that matter, you've not seen a very big move up.
So, if you look at Reliance Industries, the previous top was around 2270 odd levels. We did a dip to 2000, 2050 zones and bounced back sharply, and we've come back to that 2270 odd mark, tested it for the last few days. Given that it's a very significant resistance of the last 6 months, we can see some bit of a pause here for maybe a few days or a couple of weeks also. But moment it crosses and sustains 2290, that is the point of time the breakout is confirmed. Remain positive on the stock, dips to 2250 to 2200, remain a buying zone. Expecting it to eventually break out above that 2290, 2270 band and head up towards the 2600 also. So the view is positive, some bit of a pause given that there has been a strong move. And like I've been mentioning, the Nifty is overbought, the constituents are not. So in this divergence, we could expect a pause across the names in the large heavyweight. So going forward, a dip in Reliance would be a good opportunity to actually dip in and buy and hold on for the next 2-3 months, which is where I would expect a breakout to happen.
Sure. Okay, Naresh, stay with us, but Yogesh, Kunal, we'll let you both go on that note. Thanks as always for taking the time out and joining in today. Let's begin winding up the market trading day. And after 2 days of a big move, we finally, paused to take a breather. 70,089 is where the Nifty futures are shutting shop for the day. A marginal downtick of just about 32 points. Actually, from the highs to the lows of the day, it's been a very, very quiet consolidation kind of move for the index today. At no point in time did you have any big move up or a big move down really coming in. For the broader markets as well, flickered in and out, but we've managed to maintain our leadership, and they've managed to outperform what the large caps have done. About 107 stocks going home as winners within the F&O universe. Asian Paints, Tata Motors, SBI Life, Axis Bank, Nestle, L&T, UPL, Titan, BPCL, DRL, they've all been winners in today's trading session. On the flip side, the pressure points for M&M down about 3%, Tata Steel down 2.6%, Cipla, Hindalco, Bajaj Finserv, JSW Steel, HDFC, TCS, which lost about 1.6%, Infosys, HCL Technologies as well were laggards, as was Kotak, HDFC Bank, Bajaj Finance, ICICI Bank, Bharti, and even Reliance Industries, which closed in just about with a meager gain. That said, it was much more lively when it came to the broader markets. So CD Union Bank, about a 5.5% uptick there. UBL up 5.6% on the futures. XI up 5.3%. Havelspur up 6.3% on the futures. In IEX, that has been your big mover today with an 11.3% uptick. It's largely metals and a clutch of autos which have dragged when it came to the liquid universe. Mubina, what else have you been spotting?
Okay, I think you highlighted realty, which is, I guess, the big talking point really of today. But It's gained 5%, the Nifty really. This is the biggest gain that we have seen since the 1st of Feb 2021. And just in the last 5 trading session, it's been a 9% gain. The Nifty Bank, meantime, has declined over 4%, 400 points, pardon me, from the day's high. But guess what? It has been able to maintain that gaining streak for the last 5 trading sessions. And largely, if I have to dissect what exactly, really caught my attention within the Nifty banking space as well, if we have to break it down between the different kinds of banks, it's really a mix, but it's just 2 banks really that have been in the red, Kotak and HDFC Bank. It's the smaller banks today that have taken the lead. So RBL Bank and IDFC First Bank, both of them higher by more than 3%. AU Small Finance Bank too is higher by 2.24%. So that's an interesting reversal of trend of sorts. The auto space too has largely managed to end in the green today, despite the overall weak benchmark and the fact that the commentary was not that great. But guess what? M&M today, especially after the numbers, lost a lot of momentum, 3% down. Maruti too down 0.9% after the numbers. Tata Motors, interestingly though, did manage to stand out, 2.8% higher, though mind you, Tata Motors too did say that they are facing production problems. So that's of course about the auto space. We still have a lot more numbers to go, so especially from the two-wheeler space. So I think that's something that's going to sort of trickle in tomorrow. But I think with that, we are out of time as well on this edition of Closing Trades. So from Aisha and me, thanks for watching. Stay tuned to ET Now.